All right, good day, guys. I'm not sure something is wrong with my speaker. I hope it's recording. So I'm just going to do a quick explanation on this particular setup. So coming from the H1, I didn't have quite of a good trading edge here. If you notice on my H1, I don't have like a nice stop hunt or a nice wick above showing a clean stop hunt. That's why this setup started as a low probability, and we actually did not execute it for that particular reason. And we were paying attention also to yesterday's. Okay, let me just accept someone into the room. All right, welcome, bro. Thanks for joining. So I'm just going to do a quick one just to explain what I was seeing here. So if you look at the H1, usually my high probability setups, I want to see like a week. There has to be a week. A week represents like a nice stop hunt for me. That's my trading edge. So if you've noticed for most setups which I like to take, I usually like to see a week. So what I noticed is there was no week coming back up here to show a clean stop hunt. Okay, you can't see my screen. Okay. All right. Is the screen visible now? Yeah, I'm hoping it's visible now. Okay, perfect. All right. So I usually like to see a week. You see, right on the 13 EMA, everything was perfect here. Even from the daily, daily was showing a potential of a sell bias. Why? Because yesterday's candle took out this liquidity here, as you can see, and we closed back below. So from the daily, we have that potential of retracing back to the 13. And if you notice, I also ran a fib on the H1 for this push up. So price has to potentially retrace if they're going to push up. So we had that potential of a sell bias. But the only thing which I did not see here was the wick. At least if price had wicked back maybe to the open price and started to come down, then I could have been confident about this setup. So it remained a low probability from the just because of the H1. So if you come to M15 now, what you notice is we had this particular candle at London Open. And I also showed in the group this tiny liquidity sweep. Yes, it was a liquidity sweep, but I wasn't so sure of it based on the H1 because H1 did not show me what I wanted to see. That's why I was so skeptical of that particular price action. But what I also want to emphasize is if we get a close below the 13, that should actually allow us to take a trade. This is for future use now. It should actually allow us to take a trade. Why I'm saying so is remember we've got A plus setups which are high probability, and we've got well, I don't really call them B plus, but we've got low probability setups, which is this particular one. So any setup which doesn't show a clean stop hunt on H1 or define my clean trading edge on H1. I usually don't like trading them, but those are the low probability setups. So as soon as we get this close below the 13, it should confirm that the bias for that particular session is actually bearish. So right here is when this M15 closed. So as soon as it closes, we want to go to M5 or M3. So I prefer M3 as my entry time frame. So what you will notice is soon as that M15 closed, you see this is where it closed, where we marked. On the 3 minute, we had one of the famous four candles here. We had this doji or pin bar, and we had an inside bar here. So this was a perfect entry. Why? Because if you actually take a look at this market structure here, from the London Open. This is actually a liquidity sweep of these highs. London session opened right here. We got that liquidity sweep and we got a market structure shift, which was this push down here. So we broke these minor higher lows here. So that's a market structure shift, and price retraced into the fair value gap. After retracing into the fair value gap, we got a pin bar or a doji, and we got an inside bar, which was bearish. So here was supposed to be the sell, stop loss above the last pin bar, TP on yesterday's low. Since yesterday's low was our point of interest, like I marked out, that was going to be a perfect entry. Then soon after that, we also got a break of this low and a retest, and price continued to push to yesterday's low. So this is how I was looking at this setup. If you are using M5 for your entries, it's the same thing. We got the same liquidity sweep, we got the market structure shift, and we got this pin bar here coming right near the 13 EMA. So this also was going to be an entry, stop loss above that pin bar with a TP on yesterday's low. So this is how we should actually approach the low probability setups. The clue is price. If you're selling, your price is to close below the 13 EMA. If you're buying, your price is to close above the 13 EMA. But of course, the narration has to come from the daily. The daily has to give you a clue of where it's potentially going to expand to, especially for that particular trading session. So if we come to trading view, this is what I shared in the community. So here you can see this was yesterday's low, 10 a.m. This was the London Open. So you can see that London Open happened here. Price actually pushed down. Then we pushed up straight after to take out this high. That right there is a liquidity sweep. Then we got the market structure shift, which left this imbalance. Then we got this pin bar or doji. Then we got an inside bar, which was bearish. So our setup should have been looking something like this. I think the fact that it's NFP day also, I wasn't really keen to trade in the morning. That's why you see I didn't really put emphasis on even executing the low probability trade here. So our setup was going to look something like this. So confluence is lined up from liquidity sweep, market structure shift, retest into the 13 EMA or FVG or OB with a nameable candle, with a point of interest being yesterday's low. That would have been the target. So price actually pushed all the way to TP without any hindrance here. So this is a miss, but it's not really a miss because our plan for NFP day is not to trade in the morning. So we're just watching price, and I was just highlighting what I was seeing, and I thought let me quickly do a recap just in case next time we see another low probability setup, as long as our patterns or our trading edge appears even on the smaller time frames, we should actually take that trade, but with lower risk. So if your normal risk is 1%, just use 0.5% risk. There's nothing wrong with losing that 0.5, especially if you see a pattern, because it's only 0.5 and it's only one trade. But if you win a with a 0.5 risk, you end up making 1.5%, which is still good compared to not taking the trade. But again, not taking the trade is also good compared to taking a loss. So I think we should just commend ourselves. We followed the plan here. I wasn't really looking to chase it. The reason I didn't want to chase, I believe you mentioned we're looking for a nameable candle when price was somewhere here. It would have been fine, yes, if we did not have yesterday's low here. We could have still taken this particular sell with a stop loss here. But now remember, yesterday's low is working as a support zone here. So if you take your trade here, there's no guarantee we're going to break. So that's why I didn't really want to chase price after we got the break of the zone here. I didn't want to chase, but the price action was valid. We had a break and a retest with a nice pin bar right here. So entry, stop loss. But the fact that we've got this yesterday's yesterday's low here, it means the setup now becomes it's not worth it in terms of risk to reward ratio, because this is your risk and this is your reward based on what the price is showing us. So I don't think we'll chase it anymore. This was only the best setup which we could have taken. and we could have been done for the day here. But it's all good because our main trading session today is after NFP. So we'll simply trade later on in the afternoon. So I don't know, bro. Do you have any questions? Do you have any questions based on what I've explained? If you have got any questions, I think this is the time to ask.
No, actually, I took that trade, but I after the break of the low of the day, and I targeted the yesterday's low, which was aligning with the DRO.
If there's no questions, I think that'll be it for now because we don't want to make this session long. I think I'll just post it on YouTube as well so that the
Okay,
other guys can watch it here because I believe the other guys are at work or something. So I'll
okay.
just post it on YouTube. So if anyone was watching this on YouTube, thank you so much for watching. If you watched until the end, thank you so much. I'm just going to drop a video somewhere on the screen here, which can also help you in your trading journey, especially in understanding these nameable candles here and here. And again, if it's NFP day, rather watch price, mark your charts, but do not trade. It's always best to preserve your capital. Okay, awesome. Thank you, bro, for joining. Thank you so much. I'll drop this video on YouTube just now. Enjoy the rest of your day. Good trading.